We begin again with this list of cash flows that are associated with a typical project. So far in this topic, we've looked at the cash flows that make up the initial outlay for a project. We've looked at ongoing or yearly cash flows. And we've looked at one of the terminal cash flows, or cash flows that occur after the end of the project, specifically recovery of net working capital. In this module and the next, we'll look at the remaining terminal cash flows. And in this module, we're looking at the salvage value and the tax on any profit or loss from the sale of an asset. Salvage value is the term we give to cash received from the sale of any assets that are used in the project. That is clearly a cash flow and is recorded as such in our NPV analysis. However, we still need to deal with the tax, if any, associated with that sale. And in order to calculate that tax, we need to remind ourselves of the definition of book value. The cost of the asset less accumulated depreciation. The examples that we used in the module on depreciation all involve depreciating the asset down to a book value of 0. But whether or not that's the case, we need to consider what the book value is in determining any tax. The profit or loss from the sale of an asset is equal to the salvage value minus the book value. To calculate the amount of tax, it's equal to the negative of the tax rate times the profit or loss. This means that the tax effect of a profit or loss is opposite in sign to the profit or loss. If we've made a profit, that's normally recorded as a positive number, and therefore we pay tax on that profit, and therefore the tax effect is a negative number, a cash outflow. If we've made a loss, normally represented by a negative number, then the tax effect is a positive number. Because we've made a loss, we get a tax shield. We get to claim that loss as a tax deduction, we pay less tax, and therefore the tax effect is a positive number, an incremental cash inflow, because we're that number of dollars better off by having the loss as a tax deduction.